Apple is expected to unveil its iOS 18 software update later this year with big AI improvements. And a few days ago, a bombshell news report was released, suggesting that Apple is in serious talks with Google to let Google's Gemini solutions power iPhone AI features. And this is obviously huge news, as such a blockbuster agreement will be worth tens of billions of dollars and would shake up the entire AI industry. And clearly, both Apple and Google shareholders should actively observe the outcome of these negotiations, as the outcome would change a lot for both of the companies' trajectories going forward. And for Apple specifically, it may mark the beginning of a death spiral. Some have called it Apple's Kodak moment that could cause serious problems for the company as a result of the company's stock. So in this video, we'll focus on the implications of a potential AI deal between the two tech behemoths, Apple and Google, and we will explain why Apple investors specifically better watch out. Alright, to understand why the negotiations between Apple and Google are considered huge news, you have to understand that Apple's CEO Tim Cook just recently said that Apple too is intending to become a major player in the AI space, and that the company, quote unquote, intended to break new ground in the world of AI this year, 2024 specifically. But considering what we have learned over the last few days, it seems like it's becoming increasingly clear that Apple needs help from outside parties. And we'll discuss the potential implications of this for Apple specifically in just a second. But let me just say this here. Not too long ago, Apple also halted its ambitions in the automotive industry. And Apple even moved some of its engineers from that area to projects in the artificial intelligence division of Apple. And it is rumored that since early last year, Apple has been testing its internally developed AI models that are codenamed IARCs, but seemingly those tools and those technologies are still inferior to the solutions provided by Google and some of the other competitors in the AI space, which is why Apple seemingly has come to the conclusion that they will be better off by partnering with someone else. Which brings us to Apple's new plan. So Apple is expected to unveil its new iOS 18 software update for its iPhones in the summer of this year with big AI improvements. And the announcement regarding these new features is expected in summer this year during Apple's regular WWDC event in June. And as I said a couple of times already, a new report is now highlighting that Apple seems to be bringing Google on board to turn their vision of having more AI features on iPhones, well, to turn that into reality. And that deal likely would not only involve iPhones, but also other Apple hardware products like tablets, smartwatches, and MacBooks. And for those who don't know, a potential deal between Google and Apple would build on the already existing search deal between Apple and Google, where Google is paying Apple around $20 billion each year so that Google remains the default search website in the Safari browser on iPhones, MacBooks, tablets, and so on and so forth. Now, quite frankly, not a lot is known about the ongoing negotiations regarding a collaboration in the AI space between Apple and Google. Presumably, the new deal would let Apple license Gemini features, Gemini solutions, Google's set of generative AI tools, such as creative image generation and tools for other tasks like essay writing and so on and so forth. Those tools will likely be integrated into Safari, just like Google Search, and maybe some other newly announced apps. So it remains to be seen how the companies will brand that potential agreement and how exactly it would be implemented in the Apple ecosystem. All right, having said all of this, this brings us to the most interesting part of this video, the implications for both Google and Apple. Let's start with Google. Well, clearly the news is positive for Google because it would bolster Google's position in the search space. Obviously, Google's stock and Google's business have come under pressure more recently, say over the last 1.5 years, with OpenAI and ChatGPT really making a splash and some consumers starting to build the habit of using ChatGPT for, well, AI search queries. But if Google now gets access to a ton of users on Apple devices, presumably around 2 billion active users. I think it's 2 billion active devices that would become home to Google Gemini. Obviously, this would give Google a massive edge in the AI race. It would help them improve their models over time. It would help them train them with more data. And it clearly lowers the risk of any near and arguably midterm market share loss in the search industry. So as a result, the stock of Google, Alphabet, the parent company, rose around 5% after the news broke out. And I think what this shows you is how quickly the narrative around a company can change. As I just said, everyone was skeptical about Google's position in the AI race and the search business specifically. But all of a sudden, the narrative seems to be changing. Now it's Apple, who's the company that spent most of its efforts in the more recent past on building ski goggles, while Google was building out its cloud infrastructure and seemingly might be the only company that can help Apple serve its AI needs. But if we talk about the implications for Google, you have to say that there is already a lawsuit by the DOJ that is focused on Google's already existing position in search. So far, the pair, so Apple and Google, have justified their agreement by Apple highlighting that Google search is just the highest quality search platform out there. And that on top of that, it's fairly easy for users, so Apple users, to switch the default search engine. But let's now focus on Apple and the implications of the potential agreement on Apple's business and Apple's stock. Well, arguably, it's a sign that Apple is not as far along as Tim Cook himself has proclaimed not too long ago. Clearly, Apple has been publishing a ton of research on AI topics, but the rumors now tell a different story. And it shows that Apple is clearly not in the pole position in the lucrative AI space. As I just said, we really don't know much about the potential agreements that would be made in a potential deal. And some investors, like famous investor Brad Gerstner, for example, do not believe that Apple is going to give up entirely in the AI race. He wrote on X, "There's zero chance that they are quote-unquote outsourcing AI to Google. It seems like a misread on some shallow reporting." But then again, personally, I take a different perspective here, and I think there are very good reasons why Apple actually needs to look for an external partner here. As always, the great Ben Thompson has written about this on his blog and explained why Apple all of a sudden is actively looking for an external partner here. So let me just read to you what he was writing. Second, even if Apple had their own Gemini level model, they do not have the infrastructure to serve it to their massive user base. And if they wanted to build said infrastructure, they would need to get in line for NVIDIA GPUs behind everyone else. And keep in mind that Apple and NVIDIA have been giving each other the cold shoulder for over a decade, thanks in part to a never settled dispute about NVIDIA chip issues in Apple's laptops. I doubt that NVIDIA CEO Jensen Huang would be willing to do the company any favors, even if they wanted to build out an inference cloud for serving their own models, which don't exist. Indeed, it's possible that there isn't an inference cloud that is large enough to service the iPhone user base outside of Google. ChatGPT can still occasionally struggle under high usage, and that's for people who know to go and use it. Being built into iOS has the potential to unlock an entirely new level of usage that only Google, with its TPU-based infrastructure spread all over the world, can even hope to handle. Yeah, and if Apple is giving up or at least slowing down its efforts in the AI race, the implication for Apple's business and Apple's stock specifically would be quite significant. We'll briefly look at Apple's valuation in just a second, but clearly, if they slow their efforts down now, this will have an impact on potential growth rates going forward. In this context, let me quote what Chamath, someone who I not always respect, but who I think hit the nail on its head here, wrote on X. He wrote, "Voice will be the critical front door for the next generation of the AI-powered internet. Voice and text will work across more modes of the useful internet than any other mode alone, including images. It stands to reason then that if Apple, with all of their cash and engineering prowess, has to rely on a third party, Google or OpenAI, to provide the AI-powered interface for iOS, her reporting this morning, a few things are true. On the heels of giving up on cars, this is them giving up on AI. And giving up on AI is essentially like giving up altogether too. Apple is at increased risk of getting hollowed out over time, where the best engineers start to leave in disappointment. This will eventually flow into product quality, upgrade cycles, revenues, and profits. 3, it's an unsound business decision. So I'm not an Apple shareholder myself. I do own Google stock as disclosed in some of my previous videos, but as an Apple shareholder, this would worry me a little bit because I think Chamath is right. What does this decision tell us about the culture at Apple, the level of innovation that is to be expected at Apple, and as a result, the growth rates that are to be expected in the near, mid, and long term for a business that is already large, arguably huge, and has to deal with some size constraints already. And just like for Google, a potential deal might also lead to further regulatory scrutiny for Apple. Because just a few days ago, Apple was sued by the Department of Justice for monopolizing the smartphone market and exploiting their monopoly-like position in the smartphone space. Yeah, and as I just said, Apple stock more recently hasn't performed as well as it did over the long term, as the company has been struggling more recently. Struggling may be the wrong word here, but considering the valuation that Apple is trading at, the growth rates in the more recent history have been pretty lackluster. If we just look at the year-over-year growth rates of the last few quarters, we can see that 6 out of the 7 last quarters showed pretty poor revenue growth, and in fact, in 4 quarters, Apple reported negative year-over-year growth. If you now consider that Apple is a $2.6 billion company trading at 25 times its current free cash flow, this is simply not enough. And as a result, Apple stock is down 13% since its peak in December. And while Apple is certainly a super high quality company, which I will get to in just a second, those growth rates are simply not enough to justify a free cash flow multiple in the mid-20s. But then again, you never want to underestimate Apple, a company that has done spectacularly well in the past. And ironically, the DOJ case itself outlined why Apple's ecosystem is so powerful. Let me just read to you what they were describing. Today, Apple charges as much as $1,599 for an iPhone and earns high margins on each one, more than double of those of others in the industry. When developers imagine a new product or service for iPhone consumers, Apple demands up to 30% of the price of an app whose content, product, or service it did not create. Then, when a consumer wants to buy some additional service within that app, Apple extracts up to another 30%, again for a service Apple does not create or develop. When customers buy coffee or pay for groceries, Apple charges a fee for every tap-to-pay transaction, imposing its own form of an interchange fee on banks and a significant new cost for using credit cards. When users run an internet search, Google gives Apple a significant cut of the advertising revenue that an iPhone user's search generate. So as these few lines suggest, Apple's ecosystem is absolutely incredible, super powerful, giving the company a lot of pricing power, which is why the stock has been able to grow its revenue and profits very consistently over the long term. And clearly, a potential deal between Apple and Google will not all of a sudden make Apple a bad company. But we were just talking about growth, and growth is obviously, and maybe revenue growth in particular, one of the key ingredients of shareholders' returns. And if Apple's growth continues to slow, obviously this will translate into poor stock returns. All right, just to wrap it up here, let me know what you think. Who is the winner if we see an agreement between Apple and Google? Is it Apple because they will be able to expand the already existing $20 billion high margin, arguably pure margin deal with Google? Is it Google because they strengthened their position in search and the AI race? Or is it actually both? And with that, let's wrap it up here. Take care.